Hey guys, welcome back to Compound and Everything. You know, I think we can all agree that the last 6 months have been a pretty wild ride. I mean, we've got Robinhood traders leveraging themselves to the hills. Meet Kevin, bought a bloody house using the Robinhood app. Seriously, he actually made a video on it. You can go and check it out. Like, what is this world coming to? And what kind of logic passes through somebody's mind to use a leveraged account to cover the down payment for a house? It's just beyond words. It's way outside of where I would personally be comfortable sort of laying my risk tolerance or even establishing my level of risk tolerance. However, thankfully, not all of the new investors are flocking to Robinhood and just wanting quick gains. I am seeing so many people commenting on my videos and other YouTubers' videos wanting genuine sort of knowledge and advice towards long-term sort of reduced risk investment methods. Anyway, let's get this video started. Now we're going to go over 3 different types of index funds here that cover their own popular investing styles. The first is growth, the second is diversification, and the third is income, meaning that the fund provides sort of dividend distributions. Now keep in mind here that I am using the phrase index funds throughout this video to keep things simple. However, technically speaking, these 3 options are all exchange traded funds. So our first fund is the largest listed index fund in America, which of course is SPY. Now, I'll put the ticker code on the screen here for you guys that are wanting to check out this stock, and I'll leave some more information in the description below. However, this fund is dedicated to tracking the S&P 500. Now, when it comes to returns, SPY has provided an average return of 8.3% over the last 5 years. However, if we stretch that timeline out a little further, impressively the return reaches 8.93% over the last 27 years. And not only that, SPY offers a very sort of affordable compounding interest-friendly management fee of 0.09%. So why is there so much hype around SPY? Well, firstly, I mean, this is the index fund that Warren Buffett suggests everybody buys and holds. And honestly, the proof is really in the pudding here. Since 1926, yes, that is 94 years ago, this fund has returned just under 10% year on year, which is an absolutely freakish return that is almost unparalleled over the same period. So let's look at some of the companies making up this fund. Firstly, nearly 25% of this fund is controlled by 5 companies, which are Microsoft, Apple, Amazon, Facebook, and Google. Now, short term, these guys have provided some significant growth to the underlying index. So yes, they are propping up the market, which may be sort of somewhat artificial short term. However, in my opinion, long term, these guys will still be leading the way for many decades. Now, of course, there are 495 other companies still making up this index, and I won't name them all, but I will put a link below for you guys that you can check out after this video and see the whole list of every company making up the S&P 500, and especially SPY. So, I mean, when it comes to SPY, the fund really has it all in my opinion. I see this fund as returning similar results as it did over the last 100 years through the next 100 years. And it will definitely at some stage be making up a portion of the public portfolio we are soon announcing on this channel. Now, our next fund is you going down to the bottom of your screen and smashing the like button. I am so close to 10,000 subscribers. I can taste it. However, you smashing the like button will expose my videos to more people, which hopefully results in a few more subscribers. Anyway, our next ETF is actually the Growth Fund. So keep in mind, there are a lot of options here to choose from. So if I haven't picked a fund that you guys like, comment below and I might be able to address the funds that you would prefer in another video. However, I've only had one spot here, and I've decided to go with the fund that I absolutely love long term, which is QQQ. Now, for those of you that aren't aware, this fund is listed over in the US, and I will put the ticker code below here on the screen so you guys can check it out. Now, this fund is tracking the Nasdaq, or more sort of specifically the largest portion of the Nasdaq 100. And of course, right now, as we all know, this fund is at all-time highs and is running hotter than Megan Fox was in the first Transformers movie, which we all know is not sustainable. However, let me explain why I think this fund should be on your watch list and why it might be the most significant choice you ever make as an investor. So first of all, let's get the business out of the road here for a second. QQQ has a management fee of 0.2% and an average 10-year return of 20.4%. Which, I mean, is an absolutely insane return over such a short period. However, that's not really why I like this fund. And that all comes down to me asking myself the question of where do we go from here as a human race? Obviously, we've seen unprecedented technological advances over the last 50 years. However, I honestly think this has just been a drop in the bucket as to what we will see in the next 50 years. And I think it will be nothing like we've ever experienced before. And of course, who is likely to be leading the way when it comes to these advances? Well, the first names that come to mind are Apple, Microsoft, Amazon, Facebook, and Google, and maybe throwing Tesla in the mix as well. I mean, when it comes to sort of futuristic tech, I believe our lives are about to change. I mean, think about sort of smart home devices that will fully automate our living experience. Something like robotics that will cook and clean for you. Let's just discuss that point for a second. We have a consumeristic generation right now that has proven they are willing to pay anything for a product or a service that makes their life easier or more enjoyable. So in a time where people are willing to spend $2,500 on a mobile phone, how much do you think they're willing to spend on a machine that cooks and cleans for them? I think the next wave of innovation will make the current profit margins that we see at the moment look like pennies on the dollar. And we know where this is coming from because even if there are amazing new startups creating these advancements, we know that the big guys are either going to buy them out or copy them. And that's just the big six. We still have nearly 100 other companies listed on this index. And in their own right, they're already achieving, innovating, and getting ready for the future. So yes, I'm incredibly bullish on all things US tech right now. But please don't confuse that with me calling US tech a buy right now. It's not. Short term, it's inflated, and you will get a better opportunity in the future. And in my opinion, if you don't think that, well, that's fine. You could always dollar cost your way in with super wide purchasing intervals or a lower budget and just ride the wave. It's really up to you. Anyway, that is my number one index fund for growth right now. It's a solid 30-year hold on my end, and only time will tell if it plays out how I think it might. And that brings me to our final fund, which is our income-paying, dividend-distributing beast. Now, for those of you in America watching this, just hear me out for a minute, because this one might be worth your time considering as well. Now, when it comes to income, I have always leaned towards Australian funds, and I don't mean that sort of biasly because I'm an Australian. It's because we have higher paying dividends in Australia. In fact, the last time I checked, I'm pretty sure we came in at number 3 on the worldwide rankings for highest paying dividends. So anyway, this fund is called VHY. For those searching outside of Australia, you'll need to use the code ASXVHY, which I'll put here and in the descriptions. So first, let's cover the business side of things. This fund has a management fee of 0.25% and has returned roughly 5% per annum since inception. In fact, if you bought in at the low at March this year, you'd actually be sitting on a capital gain as well as a 10% dividend return. Now, like I told you guys, our dividends here in Australia are just like our gun laws. They just make sense. Anyway, so why do I like this fund? Well, it's a pretty simple fund. You know that you're getting an average return of the best possible dividends from one of the best dividend paying countries in the world without having to put in any actual effort sort of into buying and selling individual stocks. At the end of the day, over a long-term period, Australia will probably continue to be dominated by dividend paying stocks. So this might be one to add to your watch list, regardless of where you live. So now we've covered my growth, diversification, and income index funds. which I guess leaves me in telling you if I'm buying any of them or not right now. So firstly, at this point in time, I'm not a dividend investor. So that fund is not on my watch list and not something I'm considering. However, when it comes to my diversification fund, meaning sort of the S&P 500, well, yes, I do dollar cost into these positions every month via my super or 401k, depending on where you're from. However, when it comes to QQQ, which was my growth fund in this video, no, I'm not buying them right now. And yes, that, I guess, does somewhat go against what I would normally say, which is just dollar cost average your way in and forget about the rest. However, historically speaking right now, the Nasdaq is writing checks it cannot cash for maybe a decade or more. And I plan on waiting until these valuations are at least slightly more reasonable before attempting to open a position. Now, if you guys would like me to cover any other ETFs, just type them in the comment section below and I'll add them to my spreadsheet for a future video. And of course, if you guys did enjoy the content, feel free to tap that like button and maybe consider subscribing and dinging the notification bell next to it. Anyway, guys, thanks for watching and I'll see you in the next episode. Cheers.